To Kuala Lumpur to speak to Xing Gan, who is a financial market strategist at Exness. Great to see you, Lee. Thank you for your time. What's the disconnect here between huge AI spending while oil prices are rising? Are the two connected or not?
I would say that, oil prices rising definitely would pose some threat to inflation. And I think to some extent, right, when oil prices are high, there are inflation concerns. That also boosts expectations for Fed to adopt a more hawkish stance. And because of higher interest rate prospects, it's going to weigh on this, AI companies. And I think that's where we could see, when there are inflation concerns and also rising oil prices, then that would also, dampen market sentiment and weigh on that AI rally.
Yeah, you say hawkish approach from the Fed. Do you think that might change at its next meeting because of the rising oil prices and the interest rates may be lowered?
I would say that now that we're seeing oil prices surging again, I don't think the decision itself would change, but it could influence the Fed's messaging. I think policymakers would adopt a slightly more cautious stance, given that higher oil prices would fit into inflation expectations. I think it's also going to be a case where policymakers would want to give themselves some time to see how inflation plays out. I think the bigger question is also whether we are going to see this higher oil prices, are they going to be more permanent or it's going to be temporary, and how the geopolitical developments are progressing.
Are investors buying tech stocks because the fundamentals are strong or because they almost have no other choice where to put their money?
I would say that right now, of course, the AI fundamentals are strong. We're still seeing resilient spending, but also, companies are adopting, AI services, and the largest tech companies are still continuing to generate cash flows. But I also think that there is a lack of compelling alternative, especially right now. There's a lot of uncertainty around economic growth and inflation. Investors would continue to favor companies that deliver solid earnings growth, but with slightly more caution now that valuations are demanding.
Xing Gan from Exness. Thank you, Lee.